Hello. Welcome to my channel, my dear friends. My name is Xauusd and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we have the economy calendar in front of us because of the upcoming FOMC. As we have already discussed in the previous videos also, the market is mostly waiting for FOMC, as a result of which we were expecting a sideways market, and yes, market is still sideways. And we can see here the timing is pretty odd. In my time zone, it's pretty odd, sir. And this is the main reason why 90% of the time I do not trade FOMC. You can see here, okay, it's at 12:30 a.m. and I believe most of the people from Asia do not get chance to trade on FOMC. Anyways, those who are planning to trade, it doesn't matter you stay in which part of the world, you need to be extra careful with FOMC. You need to be extra careful with your hard-earned money. Do not lose it. We all love to trade at the time of news because of the volatility, and I believe that almost every one of us have made good money at one point at the time of news, and we still believe that we made money once, so we can make it again. But if you look at the ratio, then I believe that you will see that yes, you made a good money once, but most of the time you have lost the money. So if you're a beginner, if you're a new trader, if you're in a very tight spot, unable to take any risk right now, please try to avoid trading at the time of news, because market will give you plenty of opportunities to make money under normal circumstances. Okay, let's not waste time. And gold prices set for monthly drop. We can see gold prices were on track for the first monthly decline in 4 as investors toned down their estimate of rapid and deeper rate cuts in the US on the face of a resilient economy and awaited remarks on the Federal Reserve due later in the day. And if we look at the chart of DXY US dollar index, as expected, DXY is still trading inside the range, and we can expect DXY to stay inside the range only before FOMC. But if you observe the structure of the market here, my dear friends, we can see slowly market is forming higher lows. So formation of higher lows may be an indication that we may get to see upside on after FOMC. But news is unpredictable. Nobody can predict what will happen. So so instead of taking a position before news, always try to react after news. Okay, that is a one big lesson that I have learned in last 10 years. Okay. And as we already have been discussing, that if DXY really needs to continue the upside, then obviously it will have to move above 104.50. 104.50 will be a critical level. And if DXY forms a big red candle, and if you see DXY going down, then obviously you can expect that overall the pressure on DXY will continue. Someone was on the doors, so I'm recording again. Also, let's talk about gold now. Okay. So right now gold is trading at 2033. Yesterday we discussed two trading opportunities. The first opportunity was a buy above 2040, and it did pretty well because market made a high of almost 2049, and the buy above 2040 did pretty well. And many of you took also sell around 2049, and we can see that this trade opportunity also did pretty well. So both the opportunities played out nicely, and we need to look at the opportunities for the coming day. I would like to mention one thing. After FOMC, if you see that market is taking a direction, try to follow the trend of the market instead of looking for reversals. And previously market was expecting rate cuts, but couple of days ago, weeks ago, okay, it brought to limelight that Fed is not planning for rate cuts. So as a result, market is little bit clueless. Okay, market is not expecting anything right now. So if any unexpected comment comes up from the Federal Reserve Chairman Jerome Powell, then yes, market may show some big moves. But otherwise, if you see a normal statement, and if he says that no, we are not going for rate cuts or something like that, then market already knows it. In that case, you can expect a sideways market. In that case, you can just expect some spikes in the market. Okay, so be careful at the time of FOMC. And before FOMC, what are the trading opportunities then, my dear friends? First of all, the level from where market reversed yesterday is still very much valid. 2049, 2050. So during the day, especially during the Asian session and European session, if you see gold going up, observe the market around this particular portion. There's a good chance that the sellers are still present around the area, and due to lack of volume and volatility, we can expect the reversal again. Because 2050 is not a normal resistance, it's a psychological resistance. You must be, if you're new trader, if you are new to the channel, then you must be wondering what is a psychological resistance. It doesn't matter in which market you trade. The round numbers, the round numbers like 2000, 1000, 150, 250 are always the psychological support resistance. In stock market, commodity market, in everywhere, you will see that they work as psychological support resistance. And the reason is that highest order execution takes place around the round numbers. That's why the round numbers are very, very important in any market of the world. So here we can expect a reversal around this area, and by the US session, if market surprises us, if you see the market is going up and market is bullish, then you can look for a buy above 2050 as well. But be careful, do not expect much. Try to look for 40 pips only. Yes, my dear friends, my 40 pips. Why? Because you can see we have immediate resistance around 2055. Okay, we have immediate resistance around 2055, 2058. To be honest, the zone is quite big. The actual zone is 2055 to 2062, but I think before FOMC market will reverse from 205558 only. So if market breaks 2050 by the US session, you can look for a buy for 40 pips. Try to exit on 55 level, 54. And if you see market struggling around 55, 56 area, you can look for a sell again. But keep in mind, risk management will be extremely important, because if you're a day trader, hardcore day trader like me, and if you just focus on this particular portion of the market here, right now market is bullish. That doesn't mean that market will be going very high, but at least you can expect that market will be forming higher highs. Okay, so you do not want to lose, isn't it? So be careful, and risk management is very, very important, because nobody knows what will happen to the trade. But yes, as a trader, we can control our losses. And I don't think so before FOMC market will be going above 2055, 2058. So these are the two levels we should be watching before FOMC. Okay, and accordingly we need to trade. If market reverses, we can look for a buy, and if you see market going up, going up, we can look for a sell. So selling opportunities are higher in Europe and Asian session. And if market starts coming down, okay, before the US session, if you see gold is going down, you can look for a buy around 2025. 2025 is the first level where we can look for a buy, and especially during the European session and Asian session. And then the next support is around 2016. 2009 is also present on the chart, but I don't think so before FOMC market will be hitting or heading toward 2009. Okay, so let's focus on 2025 and 2016 only. So 2016, because this was the level from where market bounced, so yes, we can expect some sort of bounce around the area. And to 2025, because you can see we have FIBO 61.8% retracement level. Yesterday when the market dropped, you can see market perfectly respected FIBO 50% retracement level. So today if market drops, at least we can expect a bounce around 2025 level because of FIBO 61.8% retracement level. Along with that, you can see the same level has also acted as support. The same level has also the previous resistance will also be acting as support. So there are multiple reasons to consider 2025 to be the next support for gold as a day trader. And my dear friends, tomorrow I'm planning to conduct a Q&A, question and answer, on my Instagram account. So if you want to ask me questions, you can follow me on Instagram. I'll be sharing the time on the Instagram by tomorrow. So there are lots of scams going on in my name. So my dear friends, this is my real profile, the .trader next door. You'll also find a link in the description box if you want, and you can start following me. And yes, you can be a part of the Q&A. And be careful at the time of news. Do not gamble. We are traders, not gamblers. Don't forget it. Bye bye.